It is Wednesday.
Yeah, oil.
It is oil day.
Oil.
We're going to jump over.
We had the API numbers come out last night. I think it was minus 6 million barrels, 6.5, I think. And the estimate, one of the estimates was 4.5 or something. And it was flat, you know, at 4:30 in the afternoon.
Okay. So we get the EIA numbers. I'm just pulling back. So that was, you know, you got a little bit of a spike there, right, on that API number, going from about 73.99 up to 74.40, and from there we've pulled back about a full dollar. We're trading 73.34, and so jumping into the 11s, we'll start off to compare things. 11 a.m. 73.25 is a point that we can use for our bullish and bearish spread, which is nice. We're only 10 pennies away from where we're trading at right now. So 73.25 would be our bullish spread up to 74.75, and then the same $1.50 to the downside, looking at 73.25 down to 71.25. You'd be buying the bullish spread.
Yeah.
This is going to be where your intrinsic value is, right? Because we're about 10 pennies above the floor of that. That means that's going to be kind of our expensive spread of the two because we have value in it. So we have some premium priced in here, and $43 for both legs of that.
And that's the 11 o'clock.
And these are the 11s.
They expect some movement out here today.
And now let's just see where the noons line up. So they're going to have an exact same price point, which is nice. So we're going to get to price basically that extra hour. So I'm going to leave these 11 a.m.s up while I pull up the 12s so we can compare them. So here's a great example. Here's your 11 a.m. bullish spread.
Yeah.
And again, we have about 7 cents now of intrinsic value, and you can see the bid offer exactly. So this spread would cost us $24, which is the 24 cents above 73.25. But if you wanted to have the extra hour, it's going to cost you, just ticking it up, $28, right?
Okay,
the
4
difference.
pennies, right?
Yeah,
About $4.
Yes, right. $4 on that one side. Yep, exactly. And then to pull up, so not to confuse, there's our 12, and then on the bearish side, same exact thing, 73.25 down 2, and you can see the slight difference. So you're looking at about a 3 penny difference, 3 to 4 pennies on each leg of it.
Right.
Right? Which isn't bad when you consider the extra hour coming into it. So we had about $43 for the 11 a.m. combined.
Yep.
And then if we were to purchase a bullish spread for noon, sell the bearish spread for noon as well, and we're looking at about $48. So that's, you know, 5, 6, 7. And what's happening here as well is we're actually ticking back to 73.25, which would be the best scenario because that's where you're paying no intrinsic value on either side.
That's right, because only 5 cents above it now.
Yeah, I mean, we're 10 cents above it.
Exactly.
And so let's just recalibrate the 11s because as that ticked back, so again, there's your bullish, there's your bearish. So yeah, now 42.
Yeah.
Right? We were just
at 44, I think.
43?
Right?
43. 43, 44.
Okay.
Either way, it ticked down about $1.
Right.
Slightly cheaper, but great example as to when you come back and now we're, look at, and there we are. We're exactly at 73.25.
Look at that.
So as that, be selling and buying, there you go, 41.
Wow.
So that's a great example of how we started at 43, 44.
Yep.
And as it ticks back to that kind of perfect spot where you're right at the floor and the ceiling of your bullish and bearish spread. And so same thing, looking at the noon, just to get that one, you're buying the bullish spread and you're selling, come on. Yeah, so about 49 still, 49.
So they're looking for some movement today.
That's
pretty
there's
cool.
Some decent premium.
Yeah.
You know, you're paying at least $40 for both legs. 41 was as low as we got it. So $41, $42 for the 11 a.m. You're looking at about $48 for the noon.
Let's look at the chart again. I'm just curious. I know you went over it, but I want to see what the movement was from last night to today.
Sure. We had about $1 to the downside, and as we continue, I mean, look at that action as we're talking about it.
That's good then. That's what you want to see when you're doing volatility trading,
right? For
sure,
yeah. I mean, on the API number last night, we spiked to 74.40 almost, 74.37 maybe, and from there we're down $1.20 almost.
Yeah.
From
this
those
last bar is pretty intense.
It is. We're moving down, and these are 5-minute bars we're looking at. And yeah, we started at 70.
Like someone know that information?
Right. So let's just see how the 230s line up as well. So what's interesting here is we're not going to get the same exact price point of 73.25, which was nice. But, you know, you could change things a little bit, as in the 230 here takes 73.50, which is pretty close. The only thing that's going to change there is that you're now going to have 30 cents of intrinsic value to the bearish side, right? Because you're 30 cents below. So this this bearish spread has some value in it, almost 30 cents.
Right.
So selling that, It's going to cost you 50. This is where things get expensive when you have a lot of intrinsic value. And then the bullish spread is going to be way out of the money. So the difference of these two basically being the 30 cents of value you got to pay on this bullish side. So that's an expensive trade, but guess what? It's not bad if you happen to be a little bearish too.
Right.
Because
and of course you can just go either side if you decide you want to do something like
exactly.
that.
You know, if you were just bearish oil, you could be selling it at $73.
Yeah.
You have profit potential down to $70.50. And you're capped out at losses at $73.50. I mean, you're risking from $73 to $73.50.
Yeah.
And realistically, for that type of a risk reward, risking 1 to make 5.
Right.
The only thing you're paying is that you're selling it at 73, now 73.03, and the market's at 73.25. So you're paying that 20 cents of premium.
It's a lot better than selling in the futures, I can tell you that.
It could be, depending on what happens.
Yeah, right.
We could get some fast moves. It's 10:26 right now, and we get those numbers in 4 minutes. And
this is going to be intriguing, man, because it seems that when we're looking at these, they're expecting a big move here. You know, compared to like every week when we do these, that seems to be just a little bit more than we have, right? On
there's some decent premium priced in there, for sure.
Yeah.
For sure. Yep. It would make sense. As in, normally, you know, it's looking for a 40 or 50 cent move over the course, and with the type of action we've been getting in oil,
for sure.
There's no reason why.
And we've had $1.50 almost every day. You know, it's been fluctuating between that $72.50 to $75, even $75.
I agree, and that's not even with inventory numbers coming.
No,
right?
Exactly.
Yeah.
Stay right there, folks. Tommy and I are coming right back. We have the Dow right now down 135. NASDAQ's up 17. S&Ps are down 10. We'll be coming back with those oil numbers for you, folks. Welcome back, folks. These are quite some numbers here.
We got quite a headline number.
Yeah.
So crude oil inventories falling 12.63 million barrels.
Yeah.
We'll get into the estimates, but either way, jumping back to the price, you want some volatility.
Look at that.
There you go. So this red bar is the 5-minute bar leading to the news. Okay?
Yes.
So we close out this bar at 72.71, and we proceed now. We're trading 73.71.
It went up a buck.
It sure did.
It went up a buck.
It's tough to put things in context that quickly.
Wow.
Quite an acceleration to the downside that we saw, because when we started looking at these trades, let's jump back to the noon trade, for instance. 73.25, right? Was where, and we were even above that. We were trading 73.35 when we started the analysis. Right. By the time we got to the news, it was trading 72.71.
Right.
It goes down 60 cents coming into the news, and then pops a solid $1 on those numbers. Pretty remarkable.
There's
for
your
sure.
volatility trade. And what's so intriguing is that each one of those, we knew that the volatility, well, the market in general was saying, okay, it's going to be a bigger number. It's going to be a high volatility number.
There was some premium priced into it, for sure.
And guess what? The trade worked. Pretty amazing, actually. Wow, that is pretty intense.
So obviously the headlines are going to come in, but big draw, 12.63 million barrels. I can't remember the last time we saw a number in tens of
yeah. Look at that estimate that it's in.
Yeah. So the estimate was a decline of only 3.7 million barrels.
Yeah.
It came in a decline of 12.6. They break it down. Cushing crude, a decline of about 2 million barrels. PAV 3 crude, decline of 7.2. Gasoline, pretty much in line, which is interesting in terms of how far crude was off. Gasoline declined about 700,000. Estimate was about 1 million. Distillates, rise of 4.1 million barrels, and estimate was a rise of 1 million. So pretty remarkable. We'll check back in. Let's take a look at that chart one more time before we peek away. And 73.60 currently. So, you know, what's interesting, most interesting, I'd say right now is, unfortunately, if you were making the 73.25 trade, right, it's like we're still in a losing position here, just to put things in, because we spiked so far low coming into the news, and we spiked higher. But the one thing that you do like to see making, if you chose both legs of that trade, is you like to see volatility. And I would say that this is going to spend some time jumping around to figure out what to do with that type of a miss. And we'll see what happens. We'll check back in. Pretty big number.
Spiking $1. Just think that if you have an oil field and how that works, like when they talk about, you know, 10 million barrels a day, it's like, really? Like,
Pretty remarkable of where prices are in terms of even at the gas pump, and and still, you know, they could be going up from here.
Listen, this number that we're at, if we take, is this Can I go on there? I'm trying to figure out.
Yeah, something's happening with the... Go ahead. Start typing, I believe.
Okay, so let me do it this way.
No, it's not going to let you. Something funky's going on with the screen.
We'll just get another one.
Okay, sure.
If we pull this up, what you're going to see, oil, you know, it's just coming into this downdraft from 2011 and 2012 or 14, and you know, if it makes it through this number, man, I mean, it's going to be like $105 oil again, man. See this number? What is that? That's 2011. The lows of 2011, that's $75. Lows of 2012 are 77. And that's what it's, you know, that's a monster supply line. Now, you know, we'll see whether it can make it through it. But if it makes it through it, man, you know, that swing point is like, what? There's not much there to 107. You know, but that is a huge supply line. I mean, look at that supply line. That's,
yeah, definitely.
You know,
oil volatility, man.
Wow,
watch out.
That's intense.
And checking back real quick to oil, you want some volatility.
This
is where you got to have those quick fingers, man. If you're trading this, so we're literally right back to where we were trading prior to the news, which is really remarkable in terms of, you know, there's the bar. I believe it's going to be the 720 bar, excuse me, 1020 bar. That's the number we started looking at it right at the beginning of that bar, and we're literally right there. But man, you wouldn't know the roller coaster we had down to a low of 72.71, spikes to a high of above 74. Pretty cool.
And you know, if you do these, in fact, you can basically do a demo, folks. Coming over to our website, hit the NADEX banner, bring up a demo account, and if you're following along and you do these, what you should also be doing, particularly if you're going to do a volatility trade, there's nothing wrong with putting your order in to sell on the other side.
Sell or buy, depending, right?
Yeah,
exactly,
sell and buy, right? So, because in this case, you may have got that on that pop. I mean, it's that, you know.
Just one of the examples you're talking about. So let's say you went in there and you did the noon spread, and you know, you could have both of your orders already in, but 73.25, you know, you could just be in there and putting in a sell order. And back it up,
74 and a quarter.
So 74 even. 74, $75 in value, right? It spiked above that level. That's all, you know, but it spiked above there for how long, right? 74.03 being the high, pretty quick lift.
No, I know. Yeah. It might have been enough, though.
That's your order was in there, probably would have been.
Exactly. Stay right there, folks. Tommy and I come right back. Welcome back, folks. We appreciate you growling and prowling with us out here. Oil market. You talk about the volatility out here today.
So we'll jump to the chart in one moment. One thing that caught the headline here. So in terms of, you had a 12.6 million barrel decline, right? And one of the reasons there is that they are refining that oil at almost record, not record, but refinery run rate, well above seasonal averages of 97% refinery utilization rate, contributing to a 7 million barrel draw, and that is in the Gulf Coast region they're talking about.
Right where we are.
Yes, totally. So to jump back to the chart, because man, quite a roller coaster, right?
Look at that.
So we are now below where we were at when we started looking at that number. So here's your 1025 bar. We come into the news. News basically hits the end of this bar. We open almost $1 higher, $1.30 higher really. We spiked to 74, and now we're $1 below that level, trading 73.06. Pretty remarkable. The first spreads that we were looking at in there, to jump back, they were all going to have a price point of 73.25. Now, what's unfortunate is if you did the 11 a.m.s and you had a volatility trade in there, this is only going to be about 20 cents away from your price right now.
Right.
So that would be, as in you get $20 of value, costing us about $40, so you'd lose there, which would probably be frustrating with the type of action that you got around that just settling back. But and that's why we'd, you know, like to pull up the noons too, because if you're really looking for volatility, not a lot of premium in that noon product
4 cents
for the extra hour to see where this plays out. So it'll be interesting to see when I come back on at the 12 noon update where that is for sure.